Welcome to Trading Lounge and the Australian report, but I need to start with the US market because the Australian market is really quite messy in its wave count, where the US market is really quite clear and clear in the sense that from this high here we have wave 1, 2, 3, 4 and 5 here. So we've been looking for an A wave and a B wave and a C wave into the box here, or maybe even stretch up to the 2650 area here, which is closer to the 61.8%. The main point here though is that if this low here is breached, this low here, then that confirms that we'll be coming down here further from that point here. Okay, so 5 waves here will deliver us an A and a B and a C here, and then 5 waves down. So the safe trade at this point is looking for a low here. So we may see the Friday session up a little bit further. We'll see how we go with that. And yeah, and this is kind of the same. The other market that's important to, well, there's many markets that are important. In fact, they all sort of weave in together in their own way. But the UK market's also very important to Australia as well. And we've got quite a clear bearish pattern here for the UK market, where we have this move down as wave A or wave 1 here, and then a corrective wave coming back up into this space. And then we've got 5 waves down here, and we've been looking for an A B wave in 3 waves, and then up for a C wave here. It didn't quite meet its target areas, but as you can see, it's fallen away here. This is minor level top of group 1. Number 3 is always, wherever you see a 3, it'll be part of a group 1. So this is a really important level here, and we should see this move lower, but it needs to migrate from being support to resistance here. We should see this down as 5 waves here, and then an ABC bounce for wave 2. Probably not pulling back up as far as that, but somewhere in there. So this can be the short sort of zone here, and then also looking for a short under here. Once this is retested here, we've got our reference point here. The main point of showing all this though is that there is this bearish overtone in the market, where we're looking at the Australian market. Just tuning into this, we're seeing it as being just the 1 hour chart here, and from the top here the same wave count as the European markets. This move down through here, I'm calling it an A wave rather than wave 1, because if it was wave 1, well then wave 2 here would be much smaller than this structure here. Wave 2 really takes up less time than wave 1 here, but we can see here this is more time consuming here than this first wave down. So I've got to put it as a wave B. So we know that going from wave 3 here going into a wave 4 is that wave 4s can get very complicated, and unfortunately I think this is really what we're sort of looking at here. We're looking at some sort of really complicated, messy structure here, because I can't really nail it down as very well. This move down through here, I would like to call it impulsive as wave 1 or wave C here, but it just doesn't count very well, and this gets really messy in here as well, but that's okay because I can see that it's a corrective rally. But this could also be a corrective move down here, where we actually see a higher run here before moving down, or we're just going to move from this high here down to this low. The 61.8% is very close to the 6,000 area here, and we could see this fail from here. I can't give a clear wave count on this here. It just doesn't, I can make guesses at it and I can see parts of it, but not enough to present it as something positive that we can use. But what we can see here though is that from this top area here, the market has moved down. It's retraced back up to its supply levels and dropped, and really we should be looking for short trades, even though the market is positive at the moment. We should look for short trades, because this line in the sand here, the 6,000, we can see the market as resistance here, can't we? We can't see it as support. And I'm thinking today that we could possibly pierce up through here, open higher, and that becomes our reference point from that space there. So if I can just grab this here. So we have to look at both sides of the market. So once the market, let's just say if we get a push up through here, then it's going to come back down and check the 6,000, okay? So then we can put that on top there as a reference point to go along there. We don't want to chase the breakout because we know we're going to get the retest coming back. So that can go up to this point here. And then what you need to do is you need to have a look at, well, we know that the US markets and the UK markets are bearish, but they've got things going on. So we need to look at this here, wherever that is here. I'll just put it on the 10 here, the 6,010, but that would leave us with the 50 and the 61.8% retracement level down here. So we won't know, really, we won't be able to confirm that we're going to be bearish unless this group 2 here, 65, 72 and 80 become the retested resistance, because on this market, on this low here, this is the low here on this market, going up here I can count this as an A wave and a B wave and then a C wave to the upside. The C wave's got 5 waves, so 1, 2, 3, 4 and 5 coming into here and failing from here and you know, moving back down from this point here. But on the actual cash market, the physical market, this is the low here. This is the problem. So in this case, if that's the low there on the cash market, then we've got 1, 2, 3, 4, 5 here. So that means that we would get an A and a B and a C wave coming into here, and then a move up from that point. So it really, we don't have a clear path yet if the US markets falls out of bed. So I would basically, you know, if you're looking for the longer term trade, then focus on the US market and keep an eye on the UK market as well. And we're not good to go here yet as such. So and this would be the short trade under here. If the 65 and 72 become the retested resistance, then you know that you're on your way from that point there. So the other point too is that Friday in our bullish weekly cycle is the bullish day, and then the Monday would follow through there as well. So you know, if this market finds support on 6,000, then you need to look at long trades. At the moment, this is retesting the strength of the market, and it can fail. So you know, you don't want to make a judgment too quick. I know that the money is coming in from the banks, and when we look at the sectors, if we've got, if you don't mind having a bit of a look at the sectors, this is the finance sector. Here, the XFJ, and this is also a bit of a complicated correction here as well, because from the top here we can count this down as 5 waves here, but we could count this as wave. I mean, I thought that we may be looking at this as the first wave down and then an A wave, a B wave and a C wave coming up here, but this is not a C wave because we don't have 5 waves in it. It's 1 and 2 and 3 here. I was looking for possibly 4 here or even 4 here, and then having wave 5 up, and then we could look to short from that point. But we didn't get that. We've only got 3 waves up here. So basically we could be, you know, in this instance here, we could be in some sort of, you know, much larger triangle pattern occurring here. So let's get a few things working. Because a triangle pattern has got an A and a B and a C for the A wave, and then an A and a B and a C for the B wave, and this may not be finished yet. We may end up with, I don't think it's the case, but to this, because the triangle is in 3 waves in each structure, so we'd be looking at, sorry, just getting these drawing tools working. So a three-wave structure like this all the time. So we've got a long way to go within all of this. So it's going to get a little bit complicated. I think it's worthwhile having a look at some of the other markets. One of the strong drivers has been the energy market, and we shorted Santos the other day. And the reason I did that, because I know that we had this structure coming down here, then we've got 1, 2, 3, 4, 5 here, so we can have a top in play, but I don't have 5 waves down here yet, and that's what I need to look for, that sort of 5-wave structure here, and then an ABC correction. So if I get 5 here, then I know that then I'll allow the rally to occur, and then we'll get another 5 down. But if I only get 3 waves down, then I'll have to bring the stop down for a very small profit or break even. But I could see that this is a bit of a top here, and when we look at the small caps that have also been a driver as well, I can see in this area here we've got 1, 2, 3, 4, 5 here, so we're running into a top here. And also too, you can see that this move down here really has overlapped this top of this wave structure here. So all this has really been strong here, hasn't it? So this is the market creeping to the top now. So the small caps can have tops getting into place. The mid caps are still not there yet, because this move down through here is corrective. It's in 1, 2, and 3 waves here, in A, B, and C. So a lot of the small caps should just make one more new high here before finishing their move down. So all of them are in different strategies, and we looked at this the other day as well. This is the telecom section as well. So I know that when markets look bearish, we start to see money going into safety, so to speak, and this is one of them here. But I'm believing this is going to be corrective as well. Here's an A and a B, and looking for little 5 waves up here that are not quite finished yet either, coming up to this high here. So if this is corrective here, then we'll see this move down on this point. And consumer discretionaries here, so I can see that this move up here has got 5 waves in it as 1 and 2, and all the way up to this point up here. So we've got this sharp move down here now, and then we've got the rally here. So this is in a weak spot now as well. This is not a trend here, is it? I mean, this is a trend, powerful here, but here we've got sort of overlapping wave structures in here, and it's definitely in a topping sort of corrective move there. The consumer staples in this part here, yeah, this is pretty toppy here too, because we got 1 and 2 and 3 and 4 and 5. It could have another little top in here, but this is 10,000 here, so a major trading level here. So this market has had the reaction, the first high above the level. So this market here will also have, it could go a bit higher, but it will be stuck to that number there. So that will be there. Healthcare has been pretty strong too, but that's well, this doesn't show me. This is the healthcare section. This move here is in 3 waves coming down here. There can be another little low in here, but it doesn't show me 5 waves down. It doesn't show me this down here so far. It only shows me this, which is a bullish sign here, bullish corrective. It may turn into this, but it's not there yet. But I also know too that this is at the medium level here, which is 25,000 here. So that's a medium level. So it will spend a lot of time here. So it's likely to turn into a corrective pattern here. And also too, with the trend here, as you know, you've got a beginning which is a building process, and you've got the middle here, and then you've got the ending process. So it's not far off. This is the industrials here, so this is also at 6,000 here as well. So it's still in corrective mode here. And we've got that sharp move down here and the rally here. So this is very much like the ASX 200 area as such. Information technology here. So we can pretty much sort of relate this to the tech stocks as such, but also it's at a major trading level here now as well. So it's, you know, CPU and those guys, the IRE and stuff, you know, Iris, they're not going to go far at this particular stage. So we are in this, the sectors are telling us that there is a sort of a topping process in place. It's just that in a lot of cases I can't confirm that we have that initial 5 waves down just yet in all of this. So yeah, just recapping, I think that even though we've got a bullish move here, we don't have a long trade here at this stage. Yeah, and we don't have a short trade either at this stage either, which is a little bit sort of annoying. So, but look, if you see Friday, if Friday closes strong, then Monday's going to follow through on that, okay? But if Friday closes weak, then you'll see Monday closing weak as well, and you want to be looking at that. If Friday's not strong today, and that means you know, after midday, I mean, most of the volume comes into the market in the first hour and a half, and then there's like a long lunch, and then 2:30, 10 to 3, the second half of the day begins. But you know, if you don't see that Friday strong, then you really need to be on the short side of the market, even though it appears bullish at here. But technically, in terms of Elliott and the trading levels, then we need to this, you know, 72 here and 65, especially the 65 in this case, needs to be the retested resistance. Yeah, and watch the S&P 500. That's going to be the main drive, and we've also got that weak Australian dollar as well. All right, I'll have to leave it at that. Cheers.